And it's welcome back to another of our accounts lesson. And of course, we're still going to be talking about the balance sheet. We have, in our last lesson, we looked at the balance sheet, but we looked at the balance sheet in a very simple format. Today's lesson is going to take us to the balance sheet, but in a little bit more detailed format. Now, whenever we are operating a business, we're gonna make a profit, and profit or loss will affect our balance sheet. Also, at this stage of our balance sheet, we have to separate our assets. Assets are of two types. We have what is called fixed assets, and we have what is called current assets. So here we're going to separate our fixed assets. Our fixed assets are going to be assets that are of long life. So we have our fixed assets, and our fixed assets this week we have motor van. And our motor van is $20,000, and we have land and building of $42,000. So our fixed asset total is $44,000. Then we have what is called current assets, and our current assets are those assets that are going to be used up much easier than our fixed asset. Our fixed assets, as I said, they have a long life, and they include building, property, motor vehicle. Current asset, and we write our current asset in this format. It's stock, then debtors, then bank, and then cash. A little later on, we're going to find out that there are other things that we add to our current assets, but for now we're looking at the format stock, debtors, bank, and cash. And in our balance sheet, our current assets are listed in what we call order of liquidity, and this means we start from the hardest to use up, and then we get down to the easiest to use up. So in order of liquidity, so our stock here was $2,000. That's our closing stock. Debtors of $500. We had $3,500 in the bank, and we had another $500 in cash. And so if we tally that, we're gonna get 0, another 0, 5, 10, 15, 5, carry 1, 3 and 2, 5 and 1, 6. So that's 6,500. Now I'm gonna add my current assets to my fixed asset, and that looks like 44 plus 6 is going to give me 50,500. 50,500 from my assets. So that's my total assets. I'm now going to subtract my liabilities, and this time it is going to be current liabilities. So I might as well let me do this. Current liabilities, and current liabilities are those that of course will be paid easily or in a short term. That's why we call them current. And most times our only current liability is creditors, but for now we're going to find out later that we have some more. And so I'm going to subtract my current liability of 2,000, which is going to leave me with 48,500. And this is the first half of my balance sheet. So the first half of my balance sheet, 48,500. Now, get to the second half of the balance sheet. Is going to be financed by capital. And in today's lesson, my capital was $40,000. Capital plus net profit. My profit from the business was $8,500. Net profit of $8,500. That gives me 48,500 less drawings or minus drawings, and my drawings figure was 500. And drawings is the money that I take from the business for my personal use. 0, 0, 48, no, my net profit, sorry, was $9,000. Sorry, I had a little bit of calculation there. See, it has to balance. We have to make sure it balances at the end of the day. So this is 0,009. That's $49,000. And I am going to subtract my drawings from that of $500. I'm going to be left with 0, 0, 5 from 10 leave 5, 4, 8. So now my balance sheet is balanced. I don't have to worry about, because my first half, which is right up to here, capital plus my fixed assets plus my current assets. This is the first half, fixed assets plus my current assets, then minus my current liability, and I get the first half of the balance sheet. Hence my first balance right here. Financed by capital, which is 40,000, plus net profit 9,000, minus drawings 5,000. And if you notice, I have the same balance down here, 48,500, and that is why it is called a balance sheet, because the first half must balance with the second half. Now that's basically how my balance sheet is set up for any sole trader business. Let's go again. We have fixed assets, then we have current assets, and we said our current assets, they are listed in order of liquidity: stock, debtors, bank, cash. Then we have current liability, which in this case is only my creditor. I'm going to subtract my current liability from my total asset, and that will give me a figure that is actually called working capital. Then financed by, which is going to be my capital plus my net profit minus my drawings, and that is going to be my balance sheet right there. Now later on you're going to find out that we're going to go into more details with this balance sheet, and maybe I need a bigger board where more could be added as we go into things like prepayment and accruals.